is taking marketing research to the next level. We would be looking at certain type of aspects beyond marketing research today. That is, we would be looking at the different type of segments which exactly are there. So we would be addressing the aspects of segments of the markets. Uh, I would be trying to just present to you. So now, effectively, if you want to look at the aspect of consumers buying different type of products, they are trying to collect information, and on the basis of the information and interaction, the aspect that they actually try to create is something which exactly is called as loyalty. So you must have heard about something called as the loyalty relationship, long-term loyalty relationship. Now, if let's say, for example, I might ask you a simple question, that is, what is the brand that comes to your mind when you decide to use a product associated to, let's say, the oral cream, that is the tooth cream that exactly you used in the morning today. If I ask you a simple question, um, most of you would be answering the tooth cream that exactly you have been using over a period of time. That exactly is very interesting, and this thing exactly has come to your mind per se, simply because of a relationship that the product or the brand established with the consumers over a period of time. I think some of you are waiting for the session, so let me just admit them. In fact, it's important that people join in time, otherwise it becomes a problem. So, so if the screen is visible to all of you, please,
Yes, sir,
I would
clearly.
request a voice confirmation.
Yes, sir.
Yes, sir.
Okay,
Also.
okay, excellent. So, some of the aspects of customer value and towards satisfaction and loyalty is somewhat which is uh, entrenched with all of us, is how exactly we uh, understand customer value, what exactly is the satisfaction that is associated with it, and how exactly is it that we are having a loyalty towards a specific type of a product or a brand, and effectively how do organizations and companies that deliver them. This exactly is something that we intend to be taking up today. We would also try to visit to something which is called as what is lifetime value to customers and how can marketeers actually maximize it. What exactly companies does so that it attracts and retains the right customers and cultivate a strong customer relationship and communities. Also, how do customer new capabilities affect the way companies conduct their marketing? So this exactly happens to be the cornerstone that we intend to be discussing today. But before that, I would be taking up today's caselet from the Indian context about creating customer value and customer relationships. So I will start with a company which exactly most of you must be very familiar with, and exactly that exactly has something to do with trying to create a connect with the customers and creates in the value. This company is called as Eureka Forbes, And Eureka Forbes actually comes up with different type of products and services. Generally, it caters to the segment of personal care products, healthcare products. Consumer health domain is basically the area where, and domestic consumer healthcare products is the fast moving consumer goods, and consumer durable products are the area where exactly this organization actually tries to pitch its products and services. Now, when Eureka Forbes, they introduced their vacuum cleaners for the first time in the Indian market, that was about 30 years ago. It had to communicate a new concept and develop the market. So earlier, this was a new product and they had to actually develop this marketing. And so the marketeer's task was to educate the potential customers about the product and its benefits so that they could be persuaded to buy the product. So effectively, European uh, customers are very, very different because they had been using this product over a period of time, but Indian customers, for them, it was a new product. So this was the challenge for the company. So Eureka Forbes chose the door-to-door sales per people, designed as designated as Euro champs. So they were called as Euro champs. The most important element in the success of this pioneering approach was the positive word of mouth publicity from satisfied customers and the referred sales that it generated. The company achieved this by developing a relationship with its customers and their families through its well-trained salespeople. A month after the sale, the company salesperson revisited the customers to re-emphasize the correct usage of the product and its accessories and to ensure that they were satisfied. The practice termed as gift of a smile by the company. This helped immensely in creating customer confidence and trust, generating further referrals and sales lead. So the customers, when they were satisfied, they would also create new sales lead and would spread a positive word of mouth about the product. Now, response time, reach, and retention are built in the part of the key result areas of the leaders of service team, and this motivates the team to strike improvements uh, constantly. Now, customers superior customer experience with a brand and the company is ensured through intensive training and retraining, performance evaluation of the people, and frequent measures of customer feedback. So it was constant training and retraining, and constant frequent measurement of customer feedback was also captured. This commitment to building a long-term relationship with customers helped the company succeed when it introduced the next product, that was AquaGuard, the first electric water purifier in India. Eureka Forbes has won several national and international awards for the best practice in different areas. So the company now reaches over 8 million families in India. So effectively, you see, the bottom line is that successful marketers are those who carefully manage their customer base. Here, we would try to see how exactly can one go about winning customers and beating competition. And the answer lies largely in doing a better job of meeting and exceeding customers' expectation. So this exactly is the situation or the caselet that we decided to take up when you exactly are coming with a new product or a new type of a service or a new to market product. You exactly have to connect with your customers. Once you connect with your customers, you exactly have to, because the customer is going to be very, very excited and would also be scared and very anxious about the type of a product, its interaction, parting its money for a value which exactly is very, very new. And the customer has to actually be told or educated as to what exactly is the value that the customer would be getting. Sometimes even the need of the customer is not clear to the customer, so you have to actually end up trying to tell the need to the customer. That exactly is called the latent need. So you have, as a marketeer, in order to push in the customer value, in order to create customer value and develop a customer relationship, would have to go an extra mile of creating some sort of a satisfied customer. Only a satisfied customer would end up to be a loyal customer. And believe me, it is not just going to be the return on investment that matters, but rather it will keep your cash counters clicking, and um, the 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 financial inputs always keep coming, and it will also end up create new markets, and the cash inflows would constantly keep on coming. So let us look exactly at the next slide, which exactly is figure 5.1. Can you see the two triangles? I request a voice confirmation.
Yes, sir. Yes, sir, we
Oh,
can.
okay, excellent. So you see, generally we have got a traditional organization. You must be studying in your concepts of management class also that generally this is actually a pyramid, which exactly is there. You have the top management at the top in yellow. I'm just talking about the left-hand side triangle pyramid, which exactly having customers at the base. Then followed above customers is the frontline people, and then you have the middle management and top. Now, this exactly is the traditional organization. So effectively, what happens is generally what the customers earlier it used to so happen that the traditional organizational chart was that the customers were at the bottom of the pyramid because they were the people who exactly held the organization, but the top management was ruling at the top. That is, the organizational head was like, for example, the chief executive officer and the office bearers and the administrative officers or the functional heads. They always occupied the top of the management. Then came middle management, and then came frontline people, that is the functional people, and then customers were at the base. Now this was the concept that was traditionally there, but the entire concept has changed now. So effectively, most important aspect, because today we are operating in not in exactly in the producers concept, but we are operating in a marketing concept. And here the power is with the customers. It's not like, for example, the production concept, which exactly had a very few producers, a few products, and the customers were at a large. They could not choose between the offering. Whatever was produced, you had to buy that, and of course the price and other factors were set by the marketeer. So, but the world has changed today. Effectively, it's a pure market concept. It's no monopoly is not there. You have got so much amount of competition. The customer is the king, and the customer decides what product to buy, what product not to buy. So effectively, the modern customer oriented organizational chart is just the other way around. So effectively today the pyramid has just turned upside down, and customers are at the top. So it so goes that sometimes it is the customers who decide what exactly constitutes to designing a sort of a product. So effectively, what product is actually created or how the product actually is created is actually designed with the customer in the center of the product. That is, the customer is responsible for creating certain features of the product per se. So the customer is responsible for setting the price of the product, and the customer is the person who exactly is given all the sort of benefits and the is appreciated for using a product per se, because it is the customers which exactly run the organization per se. The organization exists if the customers exist. So this is the phenomena as of now, and that exactly has resulted in the pyramid being inverted. So it's upside down. So today the customer is still at the base, but the base is at the top of the pyramid. So rather than the pyramid being straight with the customers at the base, today the customers are at the top. Then the most important people are the people who actually are connecting with the customers. So they exactly are at the second level. After customers, the people who exactly are meeting the customers, or bringing feedback from the customers, or interacting with the customers, or providing value to the customers, they are exactly at the next highest level in the organizational. Then comes the middle management, and the top management is at the bottom. So it actually a bottom up sort of a situation where the most important person is the customer. The customer is the king. The modern customer oriented organizational chart is actually reversed. It's actually upside down. Now, this basically context calls for the customer perceived value, CPV. That is the difference between prospective customer is evaluation of all the benefits and the cost of an offering and the perceived alternative. That exactly tantamounts to total customer benefit versus total customer cost. So we will be discussing about this important aspect. But before that, I will just take you to another interesting caselet, and this is about customer perceived value. And in order to explain your customer perceived value, I'll try to use an example. And this example is from a company called Dell. Now, Dell is, I think most of you would be very, very familiar with this company called Dell because they are into offering computers, the low priced computers. And I will be discussing the small caselet about Dell. So just listen to this caselet, and this is going to give you an orientation as to what is customer perceived value. Now, Dell road to success by offering a low priced computers, logistical efficiency, and after sales service. The firm's maniacal focus on low cost has been the key ingredient in its success. When the company shifted its customer service call center to India and the Philippines to cut costs, however, understanding the frequently led to a 30-minute wait for customers. Almost half the calls required at least one transfer. To discourage customer calls, Dell even removed its toll-free service number from its website. When customer satisfaction started slipping, and the competitors matching its product uh, quality and prices and offering improved services. Now, Dell's market share and stock prices both declined sharply. Dell ended up hiring more North American call center employees. The team was managing cost instead of managing service and quality. Now, Michelle Dell confesses. So you see, effectively, customer perceived value means that the customers are better educated, informed than ever, and they have the tools to verify the company's claims and seek out superior alternatives. And this, then how do you think customers actually end up making choice? They tend to be value maximizers, and within the bound of a search cost and limited knowledge, mobility, and income, customers estimate which offer they believe for whichever reason will deliver the most perceived value and act on it. So whether the offer lives up to the expectation affects the customer satisfaction and the probability that the customer will purchase the product again. So effectively, when we talk about perceived value, is what exactly the customer perceives. It's not the actual, it's the perception of the customer. So if the perception of the customer is that the value exists, then technically the value is what the customer has an expectation about. Now, effectively what happens is the total customer benefits is actually the total sum of the customer cost and the perceived bundle of the customer that is expected to incur in evaluating, obtaining, using, and dispensing the given market offering, including money, time, energy, and psychological costs. So effectively what happens is, let's say for example, there is a specific type of a expectation of a customer that is there, and the amount of investment that the customer does in terms of cost to search for the offering. Now, the difference between this is actually the satisfaction that is actually the customer gets. So satisfaction is expectation minus actual offering. So if the expectation is very high and the offering is low, then technically what happens is the loss is there in terms of the value. So the customer is going to be dissatisfied. But if the expectation is less and the value that is the cost that is there is very high, then the customer is going to be a bit satisfied because the expectation was not very high and the cost that it incurred was higher. So effectively what happened is this became a positive phenomena, and that exactly the outcome is that the customer is happy with the product. Now, this is actually a perception. This is not the reality. So effectively, we have to look at this is the difference between the prospective customer's evaluation of all the benefits and the cost. So if the customer feels that the benefits are very, very high and the cost is less, so it will give them a positive value. But if the benefits equal to the cost, it'll give them a zero value. But if the benefit is less and the cost is more, then definitely the customer perceived value is going to be low. So actually, it is just the difference between the customer's evaluation of the benefit and the customer's perception of the cost of offering. So effectively, what we basically do is we all the time are doing this, that how much amount of benefit are we getting and how much amount of cost are we incurring. So for brand A, what is the benefit and what is the cost? For brand B, what is the benefit and what is the cost? For brand C, what is the benefit and what is the cost? Now, this is how we try to look at the prospective benefits and the costs offered by the different type of products. And on the basis of this, we decide whether to go for brand A or brand B or brand C. So total customer benefit versus total customer cost is somewhat different because it is the sum total of all the cost that goes into there. So the total customer benefit could be things like product benefit, it could be things like service benefit, it could be things like personnel benefit, it could be things like the image benefit. So let's say, for example, you're buying a product and you're getting good value in terms of the benefits that the product is offering in terms of pricing. You get some extra services, you get some special gifts from the person who exactly is providing you these services, or you get a good bargain. And then the brand that exactly you are actually carrying with yourself is actually rubbing on your personality, that exactly this exactly is the product that you exactly are carrying. So this sum total of all these are the total customer benefit that is there. And now let us look exactly at the total customer cost. Let's say, for example, it could be the monetary cost. What is the value in terms of money? How much amount of time you took to buy this product? That is something called as the time cost. Then how much amount of energy you invested in trying to make a decision to purchase this product or a brand, that is called as the energy cost. And finally, there is something which is called as the psychological cost. How much is that, did it impact to you psychologically, is something which is called as the psychological cost. So the sum total of all the costs is going to give you cost, the total cost, and sum total of all the benefits is going to give you the total of the benefit. And benefit minus cost is equal to the perceived value. So this is exactly how I have discussed. So per total customer perceived value, you can look by this slide. On the left hand side, you have the total customer benefits. So image benefit, personnel benefit, surface benefits, or the product benefit, they total to customer benefit. And total customer cost is monetary cost, time cost, energy cost, psychological cost, they total to total customer cost. Now the difference between total customer benefit and the total customer cost is the customer perceived value. Now this is actually automatically worked out in the minds of the consumer. You actually don't sit with a pen and paper to do this, but as you actually interact with a product or a brand, you actually your brain actually automatically calculates all these and the sum totals into the benefits, and then at the same time it calculates all the costs and sum totals into cost, and it tries to do a mathematical calculation between the benefits and the cost in terms of subtracting the cost from the benefits, and tries to find out how much amount of value is there for a product A or a product B. So effectively, whichever is higher, you have a perception that this is more valuable and this is less valuable. Now, let me tell you, this is again different for different people. All the people will not be having with the same value, because a customer A will be having a different perception, customer B will be having a different perception, customer C will be having a different perception. So the objective of the company is to increase the customer benefits and reduce the customer cost for its product or its brand. Only then would the customer perception would be higher in terms of its value for the product or the brand sold by any organization. That is exactly what I decided to discuss or detail with you with an example of Dell. So earlier what happened was, when Dell started coming up with this low cost computers, they decided to since they were so much bogged down by the number of calls that were coming from customers, because the customers were actually economy segment, and they wanted to have more and more information. So they got so much bogged down that they decided to cut the cost by trying to have a cheaper alternative to the call centers, and they shifted their call centers, and to an extent they even removed the call center numbers. So effectively what happened was that the team started managing cost instead of managing service and quality, and that led to the problem with Dell. So effectively what happens is you have to be very, very careful as an organization. That is, you have to cut the cost and increase the benefits. Only then your customer would have a positive perception about your products and services. So let us look exactly at what customer value analysis is all about. The first important aspect is to actually identify the major attributes that benefit that customer value. So what are the major attributes and benefits that customers actually value? This is a very important aspect that is there. Now, for example, suppose Mahindra concludes that buyers see the offer is worth 4 lakhs, but further support Mahindra where the cost of producing the tractor, let's say for example, if you're buying a tractor, the Mahindra sees that the buyer sees its offer as worth 4 lakhs, and Mahindra's cost of producing the tractor is, let's say, 3 lakhs. Okay, this means that the Mahindra's offer generates a gross margin of 1 lakh over the cost. So the firm needs to charge between 3 lakh and 4 lakh. Now, if it charges less than 3 lakhs, it won't cover the cost. But if it charges more, it will price itself out of the market. So this is very important, that the company must understand what exactly is the price that the consumer has in its mind for the product that exactly is offered, and what is the cost it must have gone into creating this sort of a product. So let's say for example, if the cost of a tractor, Mahindra takes about 3 lakhs to produce a tractor, and the consumer feels that this tractor is worth 4 lakhs. Okay, so Mahindra has to actually price the product so that the customer and its cost is actually justified. So it must be priced between its offering is should must be between 3 lakhs to 4 lakhs. Now, if it prices at 3 lakhs, what happens is the customers might feel, since I have a perception this product for 4 lakh, but since it is priced at 3 lakhs, so probably this product is cheap, and so it might not give me so much amount of value. But if the product is priced beyond 4 lakhs, then the customer feels that this is actually an overpriced product. So it is an important decision that the Mahindra and Mahindra, that is the tractor maker, must take if it wants to price so that it should actually deliver its buyer the value that exactly is there in its mind. Now, let's assume that it charges 3,80,000. So it is creating 20,000 of customer perceived value, keeping 80,000 for itself. Okay, the lower price sets the price. The higher the customer perceived value, therefore the higher customer incentive to purchase. To win the sales, the firm must offer more customer perceived value than John Deere does. So Mahindra is well aware of the importance of taking a broader view of the customer value. Very often we see we conduct something which is called the customer value analysis. So marketers, they conduct customer value analysis to reveal what are the company's strengths and weaknesses relative to those of the other various competitors. Now, I will be discussing about the different steps that the company takes to conduct this sort of an analysis. The first important aspect is to identify the major attributes and benefits that customers value. So this is the first important aspect, that is, what exactly is it that the contributes the major attributes and benefits that customer value. So let's say for example, for somebody who wants to buy a car, especially the Indian consumer, the first value that they have is, even before they purchase a car, they are thinking about the resale value of the car. So that is one of the major attributes that and benefits for the customer, that ये brand जो है वापस बिकेगा कि नहीं market में. If they feel that the brand cannot be sold in the market, so that is actually not the value. The second thing is something which is called as the value for money, in terms of कि ये कितना uh, for example, they might say, how economic is it? So how many liters does it give to a how many kilometers does it give to a liter? So what exactly is the mileage? That could be the second attribute. The third attribute is that how much amount of space does it take? Fourth could be how much amount, what is the cost of the spare parts? So these are some of the values that the attributes that the customer values when it comes to deciding the benefits. So effectively what happens is, you have to, when you are creating a product, you have to identify these major attributes and benefits that exactly a customer actually values. So in Indian context, when you're making a designing a product, you have to look at these attributes, because the consumer is very different from a European consumer. In a European consumer, if you want to see, would be trying to see whether it's exactly safe, whether it's a safe product to drive, can it go in high speed, then it is going to add branding. Does it has a brand? What exactly are the quality norms? Does it undergo a crash test? Then is it conforming to the standards, the emission standards, or is it going to be safe for others? All these pedestrian safe. Then this, how much amount of the rundown time does it have? That is, how little amount of time does it actually spend with the in the garage or getting it serviced? These are the values exactly which is there for a European consumer. But for an Indian consumer, I told you that there will be a different set of value. But let's say, for example, let's say one of the values for an Indian consumer could be that how much economic is it to run the vehicle, that is in terms of the kilometers that it gives to a liter. But let's say, for example, in a Middle East country, this is where the price of the fuel is very, very low. Nobody cares about the cost of fuel. So effectively, the values actually keep changing depending upon the needs of the consumers or the environment that the consumer is actually in. So effectively, this exactly is the reason where the organizations have to identify the major attributes and benefits that consumers actually value. So let's go down to the next important aspect for discussion. I would So I'm receiving a message that somebody's trying to join for the last 10 minutes. I don't really know who exactly this is, but I think I have admitted everyone. Uh, you exactly have to be on time if you want to be in the class, because we can't be breaking the class for everyone. So 10 minutes is the maximum time that we give, because as it is today will be a slower class because we have a short timeline, and 10 o'clock the class is over. So we've got the next class to actually take over. So I think we'll continue with this aspect in the next class, that is customer value analysis. We shall